Welcome everybody to ZionCapitalFX. My name is Chance, and you are watching the video log series where we go from not knowing anything about Forex indices and the markets in general to becoming consistently profitable. Like I said, my name is Chance, and I'm here to help the beginner understand the mechanics of trading and how to get to a position where you're on the path to financial freedom. That's my goal. Today we're going to talk about MetaTrader on a mobile device. If you remember from the second episode, I believe it was, I have MetaTrader on my iPhone. And if you try to find MetaTrader on the Apple App Store, you're not going to find it because Apple no longer offers that on the App Store. Shortly after Russia invaded Ukraine, they took it off of the App Store because they said it didn't comply with the rules and guidelines and privacy policy, whatever that means. They said it had nothing to do with the Western sanctions on Russia, but, you know, kind of ironic, but I digress. So that being said, everything that you're going to see here is off of my iPhone. I know it, you know, to some people that's not going to do them look good, but even though it's not a carbon copy to your Android device, it's going to be very similar. So that being said, I went ahead and I stripped all my trading accounts off of my MetaTrader app on my iPhone. And it's real easy to do. I just deleted my accounts, not permanently, but off of MetaTrader. And I've got the account names, the server names, the passwords, the account numbers, all that. I've got it memorized. I've got it written down. I've got ways of retrieving that information. And it's really easy to link your accounts back onto MetaTrader. When you download MetaTrader, and the first time you open them up, it's going to open up a dialog box and it's going to ask you to create an account with MetaTrader. That is perfectly normal and it is totally fine. Go ahead and do that. That way you can register a demo account on the MetaTrader app. The default is going to be 100,000 US dollars. The leverage is going to be 1 to 100. And that's pretty much that. We'll go in depth here, but so once you create the demo account or once it registers it for you, this is what you're going to see pop up. Let me get it up here just a sec. So you're going to see this screen of all the assets. It's got Euro USD, GU, which is the British pound to US dollar Japanese yen, US dollar CAD, US dollar Swiss franc, New Zealand dollar to US dollar, Aussie dollar US dollar, Aussie dollar New Zealand dollar, and Aussie dollar to the Canadian dollar. Then underneath the asset name, you have the spreads 1, 7, 8, 4, 5, 2, 1, all that. So the spread is measured in points. If you see 1, like Euro USD 1 is the spread, that's actually 0.1 pips spread. Like and then on the British pound to US dollar GU, the spread is 7. That's 0.7 pips. So you know, the spreads are real low on these demo accounts. And I mentioned spreads because you need to look at that. As you get further along and you progress in your trading journey, you're going to start paying attention to the spreads. They're very important, especially if you're a scalper. Spreads are always at the forefront of your mind. If you go down to Aussie dollar, Canadian dollar, you'll see the spread is 20. It's bouncing between 20 and 15. So that's actually 2 pips or 1.5 pip spread. That's a whole lot more than the Euro USD, which is 0.1 or 0.5, like half a pip, right? So you look over to the right and you see the bid and ask prices. They're fluctuating, they're floating because the market is open currently. You can jump in the market, you can enter a trade right now if you wanted to. The list of assets here is the advanced view. If I were to go to the simple, so that in the top middle, if I click on simple, you just get the list of the assets and the bid and ask prices. You don't get the spread and the high or the low or the high or any of that information, right? If I wanted to edit these assets, if I want to take some away or add some, I'm going to hit the pencil mark at the top left, and then I'm gonna get rid of, let's say I'm gonna get rid of US dollar Japanese yen. I'm gonna get rid of the US dollar Swiss franc. I'm gonna get rid of the Aussie and New Zealand pairs. And I'm gonna go ahead and get rid of those. And I'm gonna leave it like that. I'm gonna click that pencil again, and there they are. If I wanted to add a pair, let's say I wanted to add GJ, Great British Pound, to Japanese yen, I'm going to hit the plus sign to the left there, and now it is in my list of assets. So I'm gonna go back, I'm gonna hit cancel, I'm gonna hit the arrow back, and now it is the bottom asset, right? Something to note, you're probably curious, why does the Japanese yen, the GJ, the British Pound Japanese yen, why is the price look different from all the others? It's because the Japanese yen is it's how do you say, it's just set up different, right? So whereas like the other assets, the pip is the 4th decimal place, right? On the Japanese yen, it's the 2nd decimal place. So that's why you see that difference whenever you're dealing with the Japanese yen. That's something that you need to be aware of. Okay. Let's see here. So that is the quotes page. If you go to the bottom left there, I'm on the quotes page. If I go to the chart, which is the next tab over, this is the chart for the Aussie CAD. I don't have that on there. Let me go back to quotes. Something I'm going to do here, I'm going to hold down on Euro USD, and then it says trade chart details. I'm going to go to the chart, right? That took me to that second tab at the bottom. This is all on the 15-minute time frame. I can change the time frame by going to that M15 at the top left corner. And let's say I want to go to the hourly chart. I'll click H1, and there's the hourly chart. Let me go to the 5-minute M5. There's the M5 chart. These 3 icons in the middle, if I wanted to add an indicator, I hit the F symbol, and that shows me the indicators that are on my chart currently, which are the moving averages, the cursor button that just allows you to navigate the chart. If you click on that, and then the shapes, that's your objects and your tools. You can add tools and whatever you want to add. I don't ever mess with those. That's something that you can go into further in depth if you want. And then obviously when you're in the chart, if you wanted to enter a trade on Euro USD, you can just hit the trade button, and then you could possibly enter a trade right now in the Euro USD. So I'm going to go back. I'm going to go back to quotes. Quotes is like our home page, right? And then I'm going to click on the middle tab, the trade. So I'm going to click trade. You'll see that my balance is 100,000. My equity is 100,000. Margin is 0. Free margin is 100,000. Margin level percentage. So your balance, obviously, that's pretty standard. You know what that is. That's how much money you have in this account, this demo account. Equity, that's think of that as unrealized profits and unrealized losses if you are in the middle of a trade. Let's say I enter a trade and my initial balance is 100,000, and for whatever reason I'm up $2,000, right? My balance stays at 100,000 because I haven't closed out of the trade, but my equity has gone up, right? I have a potential gain of 2,000, so my equity is going to be 102,000 at the time. That's always going to be floating when you're in a trade. The same could be said if I was down 2,000, then my equity would be only 98,000, right? Your margin and free margin, that is stuff that we'll get into later. And then we'll even talk about margin calls and stuff like that. Basically, think of it as a gauge to show you how extended you are or how exposed you are in the markets. If you hear the term margin call, basically that's the, if you get margin called, that means you overextended, and you're basically going to have to wire funds into your trading account to cover so the firm has you cover your butt basically, and has them cover their butt. So if you get margin called, just know that that's a bad thing. Okay. we can go to history, which is the next tab over at the bottom. So this is where all your trades, as you enter them, this is where they're going to take place once you're completed. You're going to see all the trades that you won, that you lost, and they're going to be categorized in day, week, month, and then you can even do a custom range. Okay. Let's see here. And then you'll have the profit, credit, deposit, withdrawal, balance, all that. It'll be listed underneath the history, and you'll see that because I'm going to enter some trades here just for the sake of entering. And then we go to settings. This is my demo account. There's my account number. If you want to hack into the account number, go ahead. Yeah, go ahead. Try, I guess, but if you wanted to add a new account, click on new account, and you can open a demo account here, or you can log into an existing account. So with like all my trading accounts, if I wanted to sync them up right now, I would click on log into an existing account, and then I would enter, the server name, like traders, not traders, but traders global be live. And then I would put in my account number under login. I put in my password, and then I log in, and then I'd have access to my Forex Funds account, right? So you can do that, or you can open another demo account, and then you'll see it from there. I'll have your information from when you created an account with MetaTrader, and then it'll have you register an account, and then it'll take you to the new demo account. To open a real account, please contact your broker. So when you finally register with a broker or a firm, they're going to send you a link to download MetaTrader app from them, right? And so that MetaTrader app is solely, from my experience, it'll have all the servers that broker has, right? So I downloaded the MetaTrader app from my Forex Funds, and it just has the my Forex Funds servers on that particular app. This is the general all around MetaTrader app, and so it has all the servers included in it. It's the generic version, if you will. It's not the one tailored to that specific broker. So let me go back. There's a mailbox. So like all the messages that you might get from the mailbox, news, chat messages. I really don't mess with any of this. I think I've messed with settings before. Yeah, I turned off the sounds because it makes this really weird sound when you enter a trade or close a trade. And nothing's more embarrassing when you're in the middle of a meeting at work and you're talking to your boss and you're trying to quietly enter a trade, and then you hear that swoosh sound when you enter a trade, and your boss is just looking at you like, really you're doing that right now? Yeah, bro, I gotta make money. You're not paying me enough. So there's that. Okay, so that's like a general overview of everything. Let's get into how to enter a trade. So I'm going to go to quotes and I'm going to obviously, in a perfect world, I'm going to be looking at TradingView. I'm going to be looking at the charts, but just for this sake, let's look at GU. I'm going to look at the chart, and oh wow, that's a big imbalance there. Everything's telling me to go short, but you know what? I'm feeling froggy. I'm going to go long, right? So I'm going to put in 2.5 lots. Let's say I figured my risk percentage, and I come up with a lot size of 2.5 pips. I'm going to put in my stop loss, right? So I'm going to go 10 pips more than likely below. So 21.63, and my take profit, I'm going to go 10 pips high, 21.83, and then I'm going to buy. I was successful in buying in a GU. Now you can see from this chart, that green dotted line where it says buy 2.5, that was the price that it got me in at. So that was my entry price. You see my take profit, it's that red dotted line up above that says the ticket order number and the TP, and then down below, if it'll let me zoom out, it is not. My stop loss is down below 10 pips, right? So let's go to the trade page. Oh, look at that. I am currently in profit. I'm up 40. Well, you see it as it is. And it's letting me know it's green right here because I'm within 10 pips of my take profit. So let's say I'm happy with this, with this gain. I'm going to hold down on that and I'm going to close this trade. And I'm going to close with the profit of $67. I was just successful in making money and I just closed the trade. It doesn't always go that way. So now that I entered a trade and I exited a trade, I'm going to look at my history and oh, look, there it is. It shows my initial deposit. It shows my GU trade where I was a buy for 2.5 lots. It shows my entry price and where I got out at. It was a profit of $67.50. You'll see the profit, and then you see it tallied to the total balance. And that is for the day, the week, and the month, and all that. So real easy. Now let's kick it up a notch, right? So you just saw a general overview of me getting into a trade. So let me go to a different asset. Let's go to USD CAP. I'm going to hold down on that. I'm going to go to the chart. And let's see, I'm on the 5-minute, and that's a heck of a rejection on that last bullish candle. It looks like it might be trying to fulfill. I think I'm going to try to sell that. So I'm going to click trade. I'm going to go in 2.5 lots. I'm going to go in with a stop loss of 10 pips again. Let's see, that'd be 25. Take profit of let's just say 3,700, and I'm going to sell that. I was successful. You see my entry price. I'm currently in drawdown, and you see my take profit. So that red line and that blue line, that's your bid and ask. Okay, those are the prices that you see on the quotes. They're always fluctuating, and the difference, the distance between them is the spread. Okay, the spread that we talked about earlier. That's the difference between the two. That's how brokers make their money, is by the spread. They're either going to have really high commissions and really small spreads, or big spreads and small commissions. It all depends on the type of broker that you go with. Let's go to the trade page and see how this trade is doing. I am currently in well, you see it's fluctuating from $14 to $21 a drawdown. This is where you just wait it out. You're in a trade, wait it out, let it play out, trust the process, right? Let's take a look at my balance. My balance was $100,067.50 because of that last trade in GU. My equity is down because the position that's open right now is reflecting my equity. So you're seeing that play out. Margins 2,500. I'm not really overextending myself. I've got a free margin of 97,000 basically. Oh, I'm in profit now. Oh, now I'm in drawdown. You see how that's working? Blue is good, red is bad, right? So you're getting to see that play out. Let's say for craps and giggles, I want to close out partial of this trade. I want to take partial payment or profits, right? You if you're watching YouTube videos on how to trade, you're going to hear people talk about TP1, TP2, TP3. They've already got in their head there's different levels that their trade might go where they're going to take some profits off the table. If I was going to smack $100 on the table, what would you do? Like if I told you, hey, I'm gonna put $100 here, and in 10 minutes, I might I might put down $300 extra, or um, in 10 minutes I might take it off the table and be hanging you upside down, shaking money from you, trying to get money from you. So what are you gonna do? Are you gonna just take the $100 now, or are you gonna wait for me to slap down $300 and then take a partial profit off that? You might skim $100 off that and then let it play out. Maybe I'll put more money down on the table for you, right? Like I hope that illustrates the idea that you can pay yourself and still let your position run. There is, of course, it could go the other way. uh you might be up 3% in a trade, and then the trade breaks down and it just totally reverses and hits your stop loss. It just depends. So what I'm going to do is, let's say I'm content with the $9-10 profit that I'm seeing here. Oh wait, never mind. I'm I'm in drawdown. But regardless, let's modify this order. Okay. Let's modify and take part of our position out of the market. We're going to reduce our exposure, and hopefully we're going to pay ourselves by the time I do this. If not, I'm going to take a little small hit, but I'm going to swipe this trade to the left and then I'm going to hit the pencil button. That's the modify. And the pencil button lets me modify my stop loss, so I can remodify my stop loss. I'll I'll make it 5 points bigger, my stop loss. So I just modified that. I could even modify my take profit. I changed my stop loss on my take profit, right? So like I said before, maybe it's the check sign, right? Yep, here we go. Here I can take part of my position. I can close part of my position out. So I could close with a profit currently of $12. I'm going to see where that cursor's at the top. That's my position size. I'm going to take out two, or half of that, and I'm going to close with a profit of $4.30. Well, maybe not. I think right when I closed it, I think I closed with a loss. Let's check my history. Yeah. Okay. So when I took part of my position out, I closed with a loss of $1.46. Right. Let's see if I can do this again. I'm gonna go back to my trade, and I'm currently in, you know, uh, you see it, drawdown. So I reduced my position, so I'm not gonna lose as much as I was um, when I first initially set this trade. So I'm going to re take another part of this position out of the market. And oh I when I put two in there, I actually took two lot sizes out and I left the half lot size in there. So let's say I'm going to close half of this position again. So I'm going to take 0.25. I'm going to close with a loss of $3.83, $4. I'll just close it. And I'm still in drawdown. I'm just going to go ahead and close this. I'm going to hold it down. That's another way to do it. Just hold it down and you hit close, modify trade, open another position is all that is. Now we're going to the chart. I'm just going to close this position out. Close with a loss of $6 or $7, whatever it is. Yeah. History. You see the trades that I took there. This was all the same position at one time. This was all one trade. And then when I took out two lot sizes out of here and had a loss of that. And then I had a half a lot size, still a running position. And then I took half of that out and I had a loss of that. And then when I had closed the entire position out, I had a cumulative loss of that. So 11, $12 and 58 cents. So That was the loss there. Um, Trying to think what else we can do here. Quotes, we went through quotes. Some I didn't talk about. Hold down on the asset like GU, right? I'm gonna press and hold on that, and you're gonna see trade, chart, and details. The details, the devil's in the details, right? You click on details. This is gonna give you more information on that particular asset. The thing that I want you to kind of focus on is the contract size. Forex, contract size from broker to broker is usually it's always usually the same. It's going to be that 100,000. When you get into the indices, like when you start trading CFDs like Nasdaq or the Dow Jones, um, German 30, whatever the case may be, depending on the broker that you use, the contract size is going to be different. I can tell you from experience, I was um, I was already established with my Forex funds and I was working on possibly starting an FTMO account. So what I did was FTMO, the cool thing about them, they're a prop firm just like my Forex funds. They've been around a long time. I think they were one of the first ones, FTMO was. Uh, they've got a setup to where you can open up a demo account, but still have to abide by the rules of their challenge accounts. So I was used to trading my Forex funds and I knew the contract size of my Forex funds. So I knew how to figure my lot sizes in my head, right? So I knew that my stop loss was going to be 50 points. So I knew already exactly what my lot size had to be when I went into a trade. Well, that's all great and dandy for that contract size, which I think is 100. So when I went to my Forex fund or FTMO, the contract size was, I think, 10. So it was a totally different contract size. So the way I was figuring out my stop losses and my lot sizes was totally different. And I didn't realize it. So I entered a trade in FTMO's demo account, um, which is totally free. And I highly suggest if you know you're at the point where you want to tackle a prop firm, that's the way to go first. Just to, test the waters and see if you can handle it. But I had entered that trade and I totally like blew that demo account according to their challenge rules because I overextended myself. I over leveraged, not realizing that the contract sizes were different. So it's uh it's a zero sum game. There's no room for error. You need to do your homework. Pay attention to contract sizes and how you're going to do that, the details. So I'm going to close that out. Something else that we can do on here, if we wanted to trade, we could do, I'm going to go to GU again. I'm going to look at their chart and looks like it's selling. Something that you can do is you can get into sell limit orders, buy limits, sell stops and buy stops. I think that should be a video for another time because that's a different concept. That's not an instant execution or a market execution order. That's what we've been doing this entire time. You have to physically enter the trade, and then once you hit the parameters, you're automatically filled, and you're instantly in the market. Right? That's called a market execution. Buy limits, sell limits, buy stops, sell stops. That's a different way of entering the market. So, you're picking an area where you think price is going to hit, and then once price reaches that point, then the order gets filled and then you're entered into the market. It's not instantaneous, right? You set the parameters of when you want to get in, and it could be a day from now before price ever reaches that. And then once it reaches that point, you're automatically into the trade. You might be asleep, or you might be walking the dog, not even realize it, and it entered you into the market. There's people that take advantage of that and utilize that. There's people that make all kinds of money doing it. I've done it. It's not a beginning thing. I'll get rid of that. Sorry. It's not a beginner's, um that ruined my train of thought. I'm sorry. Sorry. But that's an advanced technique, and we'll go over that later. But so that's the general rundown. Um, you got the quotes, you got the chart, you got the trade page, history, and settings, right? And just for the sake of it, let's go ahead and enter a trade. We're gonna enter a trade on USD CAD, and we are going to sell it, right? I'm gonna change my lot size for a 10. We're going 10 lot sizes, right? So for every pip, just real quick, for every pip with 10 lot size, every pip is $100, right? So I'm going to change my stop loss to 37.25.9. I'm going to take profit 37 0. So I'm going for 15 pips, and I'm going to sell. Boom. And I am in the trade, right? And then let's go to the chart. I'm going to change the asset. I'm going to go to USD CAD, go to the chart. You can see my entry price is where it says sell in 10 lots, and looks like a rejection. So if you go back 2-3 candles, you'll see that bullish candle with a huge wick at the top. In my eyes, that's a rejection. But at the same time, it happened so quick. The market's got to fulfill that wick and to pick up any lost orders that didn't get filled at the time. And so what you're seeing now is you're seeing that white bearish candle play out, and that is what we call a tweezer top. That's a candlestick pattern. And if this candle keeps going down, then we know that there's a pretty good likely probability that my take profit will get hit at some point. So let's just let's just watch it get played out. It's looking good, looking good. Let's take a look at the running trade. I'm up $87, $80, 72, right? This would be a good time to go over the ticks. So I'm gonna go to the trade. I'm gonna hold down on my running position, and I'm going to just look at I'm gonna hit close. You see that blue and red squiggly line looks like the heartbeat machine that you find at the hospital. That's the tick chart, right? So there's the bid and ask ticks, and those are constantly changing, constantly fluctuating. And right now, price is currently hesitating. So what is that telling us, right? Back in the day, if you ever read a book called Reminiscences of a Stock Operator, Jesse Livermore, probably one of the all-time most famous traders of all time. He got really good at reading the tape. It was the ticker tape, and all that they knew was price and volume. That's all they knew: the name of the stock, price, and volume. And he would watch the ticks, and he would see the ticks. They would call out the quotes on the quotation board, and there'd be a boy up there writing down the prices, the quotes, and there'd be a guy yelling it. And what they're doing is they're reading the tape. They're reading this, what you're seeing right now. And he got really good at it, and he would go to the bucket shops or the brokers, and he would clean house to the point where they wouldn't, whenever they see him walk into the bucket shop, they'd kick him out because they knew they were going to lose money whenever they saw him. The boy trader is what they called him. He was probably the first technical trader out there, without even knowing it. But yeah, it's really important because there's people that will sit there and just watch the ticks. I don't have the mental capacity to do that, but I want you to understand that that's what that is. When you hear people talk about ticks, that's what that is right there. You're seeing them. I'm going to go ahead and close out of this position. So Let's see here. Go to history. That's not bad. I made $357 in that trade. I just made a profit of 412 on the demo account. That's almost 0.5% for $100,000 account, right? 1% of $100,000 account. It's $1,000. I made that in the span of. I made almost half of that in the span of 15 minutes. I don't think that's too darn bad. One thing I want to stress though is it's not about making money. That's that's it's gonna sound silly, but that's the easy part. Making money is the easy part once you find your edge in your strategy. Keeping that money, preserving the capital, that's the hard part. That's the part that gets me, right? So um and don't focus on the money when you're starting out. Focus on the process, right? I'm now at a point where I'm starting to see, as stupid as this sounds, and there's people that are going to say there's no way that you can do this. I'm starting to see order flow a whole lot better than what I used to. I'm seeing order flow a whole lot better than what I did 2 years ago. I'm here to tell you that right now. Once you start seeing order flow and understanding how the market operates, understanding the parameter that the market operates in, and seeing the telltales of when the market is breaking those parameters, it's breaking those rules that we as humans define the market by. uh it gets easy, right? So, or it gets easier, I should say. I'm not a guru, I'm not a master trader. I'm just a guy that's starting to see the market for what it is. Okay. uh Anyway, I'm rambling at this point. So I hope that helped. If you're never ran into MetaTrader before, I hope that helped. I hope you got something out of it. And even the guys that have watched this or know MetaTrader, um, I hope you got something out of this. Uh, if if you didn't, or if you did, let me know. Put it in the comments. If you like the content, hit the like, hit the subscribe button, hit the bell for the notifications, all that jazz. I appreciate you watching this. I plan on making more videos. I want to make a desktop version of MetaTrader because I know some people out there that solely trade off a cell phone and have never messed with the desktop version. I don't really care for the cell phone version. I don't like the mobile device trading. I'd much rather trade on my desktop, and I will go over why when I do that video. How about that? So stay tuned for that. And just thanks for being there and for watching me ramble about stuff. And I can't say this enough. If there's anybody out here that's watching this and you're just struggling and it doesn't make sense, um, I just want you to take a deep breath, and I want you to realize that I was there, and there's days that I'm still there. Okay. Uh, it's okay. It's gonna be all right. We're gonna get through this. We'll get through this together. So any questions, suggestions, concerns, comments, I got thick skin. Lay it on, throw it in the comment section. And till next time, thank you everybody. Have a good one.